Is this man the most dangerous person in crypto? We're gonna tell you why it just might be. Let's get it. Welcome to BitSquad Crypto. My name is Ben. Today we're gonna be taking a look at Barry Silbert. And is he the most dangerous man in crypto? And first and foremost, I do want to point out, I mean, you guys see this. This is him combing his hair. Don't forget, Barry, we know that you actually look like this. We know you look like this, Barry. I digress here. Let's get going on this. We're going to talk about the drama between the Winklevoss twins and what's really behind it. Whew. And is this the same model that Barry used to destroy another crypto company? You're going to have to tune in maybe next week to find out about that. Inside DCG, the crypto conglomerate led by billionaire Barry Silbert that's come under fire from the Winklevoss twins. This is something to watch this week as Genesis may be forced to file bankruptcy on Friday. This could be the start of an epic dump, maybe even a new bottom. I don't think that's going to happen, but it is definitely a potential. The main difference between if Genesis files bankruptcy and all the other collapses we've seen is the other ones were out of nowhere. Celsius, out of nowhere. FTX, out of nowhere. Voyager, out of nowhere. We know Genesis is in trouble, so some of that may be baked in. Two of the most influential crypto executives are duking it out with nearly $1 billion in customer funds at stake. Gemini co-founder Cameron Winklevoss blasted Digital Currency Group, or DCG, founder and CEO Barry Silbert in a public letter on Monday accusing the billionaire of bad faith business practices. Winklevoss says that DCG and Genesis owe the crypto exchange and its customers $900 million. He gave Silbert until January 8th to commit to resolving the issue. This is huge because if you've been watching our live stream, we've been telling you, from what I understand, there are two investments alone. One is in Circle and the other is in a large crypto project that could cover the entire bankruptcy and insolvency. Winklevoss also claimed Silbert borrowed $1.67 billion from his own Genesis subsidiary for share buybacks, venture investments, and kamikaze grayscale NAV trades, or NAV trades, that inflated fee-generating assets under management. So this is a letter from Cameron Winklevoss here to Barry Silbert. You can check it out on Twitter by going to @Cameron. Man, he really got in early, didn't he? And here it is, basically laying out what they want. Some of you guys have probably watched maybe Altcoin Daily's video on it. They did a very good one if you want to see exactly what he said. We're not going to cover all the words, but the Winklevoss twins are putting pressure on Barry Silbert with his January 8th date. The Winklevoss letter comes as investors are suing, it says suing the twins and their firm over the interest-bearing product. A complaint filed on December 27th said Gemini refused to honor investor redemptions, wiping out investors who still had holdings as Genesis was unable to return the crypto it borrowed from Gemini-earned investors. So just so you understand, this is a little bit different than FTX. FTX was commingling customer funds, of course, Alameda funds, FTX funds, customer funds, and they were using those to try to get yield on other investments. However, the customers were not getting those returns. With Gemini, it's similar to what Celsius was, where you sign something saying that they will take your crypto and try to earn yield and give you a percentage back in interest. That's the Gemini Earn program. They also have a regular spot exchange that are not allowed to touch customer funds. So it's not the exchange in total that's affected, it's only the earned customers, those who signed up for those. And just a reminder, it's $900 million that they owe the earned customers, that the customers are trying to get their funds and they can't. So let's move on here. Let's check this out a little bit more here. Okay, so last week we covered Circle and why they're such a bad actor. Reminder, Goldman Sachs-backed crypto payments group Circle aims to become a full reserve national digital bank. If you watched my video from a little bit earlier today, you're seeing how now BlackRock is trying to get involved in Bitcoin mining. We're seeing traditional finance, the bad actors, the elites, try to take control of crypto one step at a time. Now, a reminder, Goldman Sachs has been doing this for a long time. This is not new news. This right here, where they made this statement, goes back to August 10th, 2021. So here we go. We got digital payments company Circle plans to become a full reserve national commercial bank, according to an announcement by CEO Jeremy Allaire on Monday. Allaire said the decision had partly been the product of the growth in its dollar-backed stablecoin, USDC, which has a market capitalization of $27.5 billion at the time. It's much higher than that now. It's the second largest stablecoin after Tether. Now, a quick look at CoinMarketCap shows the current numbers. Tether at $66 billion. This was up to $82 billion in market cap. USDC coin now at $44 billion. It's basically a 50% move away from overtaking Tether, which has been the stablecoin of choice forever. We're seeing a move in the United States, in my opinion, to get rid of Tether, to outlaw it. I think this will come in the next 2 years and pave the way for USD coin or USDC. Currently, it's number 4 on CoinMarketCap. Tether is number 3. We talked about on Friday the plan for USDC to become the centralized bank digital currency of the United States. We're going to have a much more in-depth video for you on that coming up soon on the channel in the next couple of weeks. But just keep in mind, we're seeing Tether pushed aside. So let's check this out here when it comes, and I promise you guys, this all connects back to Gemini and also potentially to FTX. So we understand the plan that is afoot here with USDC. We also understand the plan that's afoot with Goldman Sachs coming into crypto. Now, back to Barry Silbert, VC investor CEO. I know we've gone over this before on the channel, but check this out, Digital Currency Group investor. Let's check out Barry Silbert's investments on record. Circle, private equity round, $440 million. $25 million back in July of 2020, $110 million, $50 million, $17 million going back as far as 2014. March 2014. That's interesting. Do you know what happened in February of 2014? Mt. Gox crashed. Beginning of the bear market. Then you fast forward to the summer of 2014. What happens? The creation of the federal bit license in New York. Not a coincidence. Circle rearing up right before we get regulation at the heart of banking, Wall Street, when it comes to Goldman Sachs and Circle. So we know Barry is heavily invested in Circle. Well, check this out. Circle, who are they partnering with? Deepening our partnership with BlackRock. That's right, guys. Through our partnership with BlackRock, we've begun investing in the Circle Reserve Fund to manage a portion of the USDC reserves. Open your eyes. BlackRock is trying to manage USDC for Circle. Think about this. This has massive implications when it comes to institutions and TradFi in crypto. We don't want them here. And yet, here they are trying to take over everything. And you can see how BlackRock filling their coffers with USDC, how much that will benefit them when USDC becomes, if it becomes, the central bank digital currency. And of course, BlackRock, of course, tied to the WEF. So what does this mean? Does the US digital dollar become the reserve currency and maybe become even the world currency? One currency for the world. Could certainly see that happening. This is directly on the Circle website. There's a little bit more about that. BlackRock managing funds for Circle's USDC stablecoin reserves. This back November 4th, 2022. Do you know what happened 8 days later? The top of Bitcoin. Big surprise. The more we invite these people in, the more they screw this space. In April, BlackRock participated in Circle's $400 million funding round, with BlackRock stating it intended to explore capital market applications for USDC without elaborating. The funding was intended to tide Circle over to the completion of its SPAC deal on December 22nd, 2022. However, last week, the SPAC revealed plans to move the closing to January 31st, 2023, a step that requires approval from shareholders representing 65% of the stock. BlackRock is paving the way for USDC. Now, let's go back to May 26, 2021, also right about the time of the first crash, which happened on May 19th of 2021. Gemini, back to Gemini, adds GUSD to its Earn product, offering 7.4% interest on the stablecoin. Gemini, trying to become a big player in the stablecoin game. Do you want to know the quickest way to become the tallest building in town? You knock down all the other buildings. Do you want to know how to get eliminated in crypto? Just go against BlackRock and create your own stablecoin. There's a precedent for that. Here we have crypto exchange Gemini adding GUSD, the Gemini dollar, offering a flat 7.4% annual yield. GUSD is the first dollar pegged stablecoin to be added to Earn. The product already supports DAI, but it is an algorithmic stablecoin, meaning it is not backed by fiat currency, but by crypto assets. Gemini COO Noah Perlman said there's high demand for GUSD among institutional borrowers, big mistake, who use it to fund their operations and investment strategies. They're willing to pay competitive market rates to borrow GUSD. Our vetted institutional lending partners such as Genesis Global Capital find these borrowers and lend your funds in exchange for an interest payment. course, this is here on the website, The Block, as you can see here. Of course, The Block CEO took $27 million from Alameda. So did that affect this article? Not really sure. Coinbase customers around the world can now earn up to 1.5% APY on USDC. And also, as you know, recently, they made 0 trading fees on swapping Tether to USDC. Why? You may be wondering, if Gemini has their own stablecoin and Circle and BlackRock want to go after them, what about Coinbase? Well, you may not know this. Is USDC, Circle, or Coinbase? Launched in 2018, USDC is managed by Center, a consortium formed to improve the mainstream adoption of stablecoins. Coinbase, along with the Boston-based financial services company, Circle, is the founding member of the consortium, switched to a trusted stablecoin, USD coin. It's in the name, USD coin. We know Jerome Powell back in 2020 already said they're open to using the private sector for a digital dollar. All right, back to this article on Coinbase. There's now another reason to use the most trusted and reputable digital dollar. Starting today, customers globally will earn up to 1.5% APY on their USD coin. That's approximately 1,500 times more than you will earn on dollars in the bank. Now customers globally can earn rewards on their USDC while taking advantages of its many uses. Many uses? It's a dollar. What are you going to do with it? So a 1.5% yield, is that great in crypto though? Not really. We've seen 6 to 8%, not that they've worked over the long term, but here on BlockFi, this is what they were offering. 7% returns on USDC. What else? GUSD. Gemini becoming a major player on the stablecoin stage. New APY, 7.5%. Guys, this spat between bad-haired Barry, you know how I feel about people with bad hair, and the Winklevoss twins. It's about more than frozen funds and billion-dollar loans. It's about a stablecoin. It's about USDC becoming the digital dollar and digital currency group. Goldman Sachs, BlackRock, Circle, Coinbase, running over every competitor to keep them from achieving their dream of becoming the digital dollar. So here's where we get into the really interesting thing about this. Crypto exchange FTX is working on creating a stablecoin, according to a report. This was written on October 27th, 2022, the day I turned 40 years old. FTX announced they were working on creating a stablecoin. CEO SBF told the big whale in an interview. Now, October 27th, 2022, November 2nd, 2022, the balance sheet of FTX is leaked to CoinDesk, a DCG-controlled media arm. They literally own it. November 9th, CZ dumps FTT, and the rest is history. I would like to submit as evidence FTX getting brought down. Yes, they were insolvent. Yes, it was their fault. More tied to this article than any article that you've ever read. Stablecoins. This is where the banks plan to control crypto, plan to control privacy, make it where you can't spend your own money. It's dangerous, dangerous, dangerous territory. Circle, Goldman Sachs, Digital Currency Group, Barry Silbert, they're positioning to become the one-stop shop. Sam Bankman-Fried got in their way. Winklevoss twins getting in their way. Be careful. It's a dangerous place to be. That's all I got. Be blessed. BitBoy out.